If you're a licensed professional in New York looking to start or restructure your practice, understanding the difference between a professional limited liability company and a limited liability partnership can directly impact your liability protection, tax obligations, and daily operations. Both structures serve licensed professionals, but they differ significantly in how they're formed, how they protect you from liability, and what regulatory requirements you'll face. Making the right choice depends on your profession, practice size, and long-term goals. A professional limited liability company, or PLLC, is designed specifically for licensed professionals who want to practice under the protection of a limited liability structure. This entity type is required for professionals regulated under New York education law who wish to form a company rather than a partnership. A limited liability partnership, or LLP, is a partnership entity that provides professional services while offering liability protection to its partners. Unlike a PLLC, an LLP maintains a partnership structure where partners share in the management and profits of the firm. When it comes to taxation, both PLLCs and LLPs receive similar treatment. At the federal level, both are treated as partnerships by default. For New York state taxes, they're treated as C corporations unless they elect S corporation status after formation. If you form a single-member PLLC, it becomes what's called a disregarded entity for tax purposes. This means the income and expenses flow directly to your personal tax return, similar to a sole proprietorship. Multi-member PLLCs and LLPs file partnership returns using Form IT-204. Both entity types may also be required to pay estimated income taxes or filing fees on behalf of their members or partners. It's worth consulting with the New York City General Corporation Tax Office or the Department of Finance if your practice operates within city limits. Liability protection is where these two structures show their most important differences. A PLLC protects its members from business debts and general liabilities, but it does not shield you from malpractice claims arising from your own professional actions. An LLP provides a different kind of protection. Each partner is shielded from personal liability for the negligent or wrongful acts of other partners or employees not under their direct supervision. This makes LLPs particularly attractive for group practices like law firms or accounting firms where multiple professionals work independently. In both structures, you remain personally liable for your own malpractice. The key difference is that in an LLP, you're generally protected from partnership debts and the mistakes of your partners, while in a PLLC, the focus is on separating business liabilities from personal assets. Forming a PLLC in New York requires several specific steps. First, you must obtain professional licensing approval from the New York State Education Department's Office of the Professions. This is a unique requirement that doesn't apply to LLPs. Your PLLC name must include the designation PLLC or Professional Limited Liability Company, and it must be approved by the Education Department before you can proceed. Once approved, you file Articles of Organization with the New York Department of State. Within 120 days of formation, you must publish notices in 2 newspapers for 6 consecutive weeks, and then file a certificate of publication. This publication requirement applies to both PLLCs and LLPs and is a distinctive feature of New York business law. Forming an LLP follows a different path. If you already operate as a general partnership, you register as an LLP with the Department of State using a certificate of registration. The firm name must include Registered Limited Liability Partnership or the abbreviation LLP. Unlike PLLCs, LLPs do not require approval from the State Education Department, though all partners must still hold the appropriate professional licenses. The LLP structure is often seen as a conversion of an existing partnership rather than the creation of an entirely new entity. Both PLLCs and LLPs face the same publication requirements, and both must maintain compliance with professional conduct rules and licensing boards relevant to their profession. Only certain licensed professionals can form these entities in New York. Eligibility is generally limited to those licensed under Title VIII of the New York Education Law. This includes attorneys, physicians, and other medical professionals, certified public accountants, architects, engineers, veterinarians, and dentists. Law firms and accounting firms often prefer the LLP structure because it maintains the traditional partnership model while adding liability protection. Medical practices and solo practitioners frequently choose PLLCs for the corporate-style structure and clear separation between business and personal liability. Choosing between a PLLC and an LLP requires careful consideration of several factors. Practice size and management style play a significant role. Solo practitioners or small groups may find PLLCs simpler to manage, while larger collaborative practices often benefit from the partnership dynamics of an LLP. Malpractice risk is another consideration. If you're in a firm with multiple professionals performing similar services, an LLP may offer better protection by shielding you from your partner's errors. If you're more concerned about business debts and general liabilities, a PLLC might be the better fit. The administrative burden differs between the two. PLLCs require more regulatory interaction, especially with the state education department during formation. LLPs involve fewer upfront approvals, but still require ongoing compliance with partnership regulations. Both structures allow for pass-through taxation, meaning profits and losses flow through to the individual members or partners. However, PLLCs offer slightly more flexibility if you later want to elect S corporation status for potential tax savings. Understanding the distinction between a PLLC and an LLP in New York is essential for licensed professionals establishing or restructuring their practice. A PLLC requires education department approval and offers protection from business liabilities, but not personal malpractice. An LLP provides liability protection among partners and works well for collaborative practices. Both entities receive similar tax treatment and face publication requirements unique to New York. Your choice should align with your profession type, practice size, liability concerns, and management preferences. Given the complexity of these decisions and their long-term implications, consulting with a qualified business attorney can help ensure you select the structure that best serves your professional and financial goals.